Hello and welcome to the Friday recap presented by the Gokhstein News Network. I am your host Landy, and today is December 5th, 2025, and we're looking at Bitcoin, well, here on a zoomed out daily chart, but we will get into the weekly in a moment, and we will check in on, we'll check in on traditional markets, but primarily taking a look at the weeklies and seeing where they closed. And we'll talk about what to expect or look for, not necessarily what to expect. And expect would be, pay attention to FOMC on Wednesday, but kind of what to look for, at least for Bitcoin coming into the weekly close, as it will be closing on Sunday at 0 UTC, 7 p.m. Eastern, 4 p.m. Pacific Standard Time. So let's jump into this daily. Look, Bitcoin plumbing the lows, the low side structure over here yet again, kind of digging into this top side here, which is a weekly swing structure around 89. Of course, that was the daily swing low of this range up here before the move down to 74, 420.69. And that was a higher low on a weekly at 89. With a lower high coming in at around 88.8, 88.7. And of course, we saw Bitcoin on the daily did dip down into touch that top side of that high side structure there. And we can see that Bitcoin has gone from expansion into compression here. So what does that mean? Well, we'll throw some levels on here, and we're going to talk about what to look for. And the conditions really haven't changed too much. Yeah, we have a little bit of a daily uptrend with a trend break here, but Bitcoin hasn't done anything significant as it relates to the weekly area of interest just yet. Outside of a dip below it, coming into the Monday session here, we haven't really seen much outside of price action within a wider weekly zone between the high side closing structure of the weekly higher low close at 93.5 and the low side closing structure, which is the lower high at $86,000, with that inflection point coming right in around 89. Now, Bitcoin is trading above it. It did dip below it yesterday, but it did not close. And it's really all about the closes below that area. I would even say that 4-hour, 6-hour closes below here, watch for things to come down further to around 87, 86.8 or so by the lower first. Anywhere below there, of course, 86 to the swing low at 84. Now, if we did see closes below there, meaning closes below 84, that would also put Bitcoin back into expansion because it would also be a close below the lower second standard deviation of the Bollinger Band set here. So here's what to watch for on the daily. If we do see Bitcoin trading and closing, 4-6-hour candles below 89, it's very highly likely going to come down and test somewhere in the mid $86,000 area to the weekly structure here at $86,000. You see the close open on the daily came in right here as well after wick fishing down to 84. If you do see 86 dropped, pay very close attention to this low and wherever the lower second standard deviation of the Bollinger Band set is. If we see closes below around 84.5, we would still need to see the conditions met with closes below 84, but it would start to increase even on lower term timeframes that it at minimum gets run and possibly lower right on a wick. And that wick can come all the way down to, 81, 82.5 or so to $80,000 and more. But in reality, what would kick off expansion on the daily back to those levels if it hadn't already hit it? It would be a close below the lower second that also gets below $83,800, $84,000 or so. That would kick off expansion, targeting the lows again, somewhere around $80,000 to this weekly level just below. So $80,000 is a weekly area of interest to $78,000, which is another weekly area of interest. So these are going to be big zones to the downside if we do see that occur. Anywhere below there, we're looking mid 70s down to that swing low at 74, 420.69. And realistically, bulls need to see that hold up. And I'm going to show you on the weekly why. It would be a pretty rough ride to the downside for the bulls if that area were lost down there. Now, on the other side of that, yes, we have a bit of an uptrend here on the daily, but it's coming after a very large, expansive move down. And again, it's trapped inside of two weekly closing structures, right? The bottom side being that lower high and the top side being the higher low close. Just above 83.5 to 84, where the upper second standard deviation is starting to come in. 93.5. Sorry, 93.5 to 94. We can start looking towards the point of control of this entire range up here at around 96,000. Now, above there, we can start looking to 96 to 98 as being the key area of interest before getting into the weekly zone up here between 98 and 101. Bulls want to see progress to the upside to test this area and show that they can push above 101. This is that big weekly level, of course, that Bitcoin tried to hold on to before, big weekly level that it tried to hold on to before rallying after, setting a lower low here on the daily and then rallying up to another weekly between 107 and 108 inside of a much wider weekly structure between that 102.5 and 112, right? So what we would need to see from the bulls here would be closes above or swings above 101. Even if this rejects, if it were to reject this area, come back down and find this area as support. That would be the bullish side and the bullish case, and then try to work its way up from there, regain it, flip it to support, and then start moving up into this wider weekly zone. Shorts cannot be pushed out. In my opinion, you're not getting any kind of a squeeze. Shorts would cover coming into some of those areas anyway. If they see a rejection, likely going to reload at some of these important areas, especially 98 to 101 is going to be a big one if it does get there. Again, this is all conditional. We need to see closes above, 93.5 to 94. So big deal here, right? Get above that upper second, expand into the POC at 96 to 98, and then start working its way into the weekly zone between 98 and 101. We would need to see closes above there while maintaining an expansive posture, because that would kick off expansion, and then try to work, the bulls can try to work their way in there. We'd probably get shorts covering in and around this area or reloading on a rejection here, and then trying to come back down here. And realistically, not pushing shorts out anywhere below 112 at that weekly. And again, downside is conditional. Drop 86, look right to 84 if we see that dropped, especially on a close. If we haven't already run down to, the mid to low 80s to run the lows again, that's where I'd be looking all the way down to 74 initially. And then any kind of closes or wick fishing below there, getting into the mid 70 region. And then definitely watch any closes below 78 down there. That would be pretty bad, especially on expansion. That would be looking for much more to the downside, running that monthly swing low at 74.4. So just be aware of that. The setup is going to start to turn bearish if the bulls don't make progress to the upside pretty soon. We already have a cross on a regular Stoke. This is not a Stoke RSI, but it's a regular Stoke, which is, a reflection of close over close price momentum. Still looks bearish right now. It's in the bullish control zone. It can stay here. So there's still a shot for the bulls as long as they're trading and closing candles above 84 to 86. We do see a continuation drive of bearish divergence. Within this structure, we've seen the initial move down that as it was being set to that key level at 89, the next target would be around 86. So, and further down, right? That would be your actual continuation down. This is a bearish flag as it stands right now anyway. So be aware of that. That doesn't mean it's going to play out that way, but it does have a higher percentage of playing out that way. And if it starts to play on out that way in the context of, realistically, if it does play out in the context of an expansive move down, we're looking for the lows again and possibly lower. I don't know if it goes significantly lower, and I'm going to show you why. if that were to play out. Again, this is ifs, and it's based on closes, because closes are what are going to determine the expansive posture for price action here on the daily. Now let's go to the weekly real quick here, and then we'll check on traditional markets. Weekly, still expanding to the downside, right? We did see a close open above the lower second. You'd want to see closes remaining above around 88.4. So again, back below 89 would start to put Bitcoin back below the lower second, which is continuation of this expansion to the downside. Doesn't necessarily mean that it's going to continue to expand to the downside, but it would indicate that we're going to see another tick down more aggressively with that lower second, lower third standard deviation, which is right there at, guess what? That weekly at $78,000, which is the weekly right here that had the swing down to that 74,420.69. I'm going to say it every time, and yes, I know it's a rhyme. And yeah, so just understand kind of the context right now. And we are 2 standard deviations away or thereabouts from the basis, but the basis is also going to continue down here. It's currently at 109, probably going to put that somewhere around between 105 and 107 area on the next tick here on Sunday. What would the bulls like to see? The bulls would like to see closes back above 94. Hey, that's the daily area that was right around the daily area that was rejected right here earlier this week at 94,181. Well, that just so happens to be the close open here of the expansive candles here. So the initial expansion close to the next candle's open is right there at that 94,182. So bulls would like to see that closed above. What would that do? Well, that would actually set a low. Now, granted, this would be a lower low. And I do want to remind everyone that this was an uptrend, and this is the trend break move. So the move back to the upside is going to be very important, because if it puts in a lower high, that's the weekly trend reversal setup, right? And the reason that I point that out is that is the more likely scenario from here. It doesn't mean it's going to happen, but it is the more likely scenario that even if this pops up, it's very likely going to result in a lower high. And this is just an example, but this would be, a trend break, right, to a trend reversal setup. And how can the bulls avoid that? Well, they would, right now, they'd have to rally all the way back to the highs and then set some sort of trend reversal back to the upside with a higher low structure, right? And again, this is just an example for illustrative purposes only. That would be from here, that would be the, kind of what they would need to do is, higher high, higher low, and then higher high and continue on. The other scenario would be you get a lower high and you come in for higher low, equal low structure like so, and that's your classic W reversal setup, right? And then you'd get a lower high, you get a higher low trend reversal setup, and then you come and you break the lower high to actually confirm the reversal is real. That is pretty much all I got for you right now in terms of this. This move is still ongoing on the weekly. Just understand that. That is something very important, is to understand this move is ongoing until we see a low set, and then we see where the next high is, whether it be a higher high as it relates to the last higher high, which is a lower likelihood, or if it's a lower high, and then we look for that would be your trend reversal setup, and then we look for confirmation of that reversal setup below the 74,420.69 here, which would be, below the low here at 80,500. Sorry, that would be your continuation. But right now we don't even have a low set on the weekly, so understand kind of the context there. All right, weekly is plumbing the depths of the oversold area coming into this next close. $97,300 to $98,000 by weekly close is what it would need. That number is going to get more attractive, probably somewhere around the $94,000 to $96,000 range next week. Again, next week's going to be a pretty big week, right? It's going to be a full week, and it's going to be a jam-packed week when it comes to information that is going to be affecting markets, specifically on Wednesday with the FOMC meeting and the potential for a 25 basis point cut. All right, let's go check on traditional markets. Oh, wait, one more thing. This it's still Friday, but the Saturday session is open, right? Closes above 86.5. So that lower first standard deviation in the range here that I was showing on the daily, pretty important, because if we then see a close on the 5-day, which is showing that it could potentially be setting up for a reversal on stochastic momentum, we would need to see the closes above 94 for that to actually come to fruition or even be actionable in any way. So 5-day will lead the weekly in most cases, and then we could potentially see a rally out of that. But again, it's all condition based. We need to see closes at minimum above 94, and then see progress to the point of control at 96. All right. But yeah, let's go ahead and check on traditional markets real quick. We're going to go and take a look at Dow, and we can see that it's in new all-time high closing area, and we had this beautiful move back to test this weekly structure right here on the highs. How beautiful is that? Look at it, 45,757 there, basis band tap, and then right back to the upside here to, I'll be honest with you, it looks like it wants to melt up, but the thing to be aware of on the weekly is putting in a lower high or swinging and closing below the current all-time high. All right, that would be bad. That would be your double top on the weekly, and that is going to be something to watch for next week. That's coming in at 48,431. NASDAQ, ugly candle. On the daily and weekly up here, this was a gap fill, didn't fully fill, but this is ugly. But Dow is painting a little bit of a different picture, right? So be aware of that. What are the conditions? Well, we need to see closes next week on the daily starting to get above 25,732. That would look good to, at minimum, test the highs, in my opinion. Now, again, we would need to see closes above the upper second, which just so happens to be right around the gap fill zone up here. But, somewhere around 26,130 to 150 would start to look like, hey, it wants to break out to new highs. Not necessarily something that I'm looking for, but that's also where the upper second standard deviation is on the weekly. Could this be something where we, again, be aware, needs to get above 26,182. Otherwise, if it does put in, any kind of a swing above there, and when I say it needs to get above, I'm talking about on closes. All right. So it needs to get above that area on closes. And right now it's rejecting that gap fill area. We'll see what it looks like coming into next week, but needs to close above 26,182. That would look good for it to actually kick off expansion again to the upside, targeting, from the weekly perspective up to around 27,000. So that's, otherwise this is going to look ugly, to be quite honest. The last true higher low structure is actually back here. So it does have room. I know everybody's looking at this area here at 24.2. Realistically, yes, it is a higher low, but this was just a step back on the weekly. Where we actually had a reversal setup was the last true reversal setup was right below 23,000 rather. SPY or SPX, doesn't matter which one you look at, same kind of deal. We need to see closes above 689. That would be continuation on the weekly. Again, this is a weekly that I'm talking about. You don't want to see swings above and then rejections and closes back below. You want to see closes above, and then that would look good for a move up. Now, be aware of swings into the upper second standard deviation at 693 to 695 here by the upper second that do not close above, because then it could potentially, paint right back down to the downside. So understand that if we do see close above around 693 to 695, I'm I'm going to be more on the side of 695. Then we could potentially see this start to get expansion up on the weekly, targeting 7 to 710. Or 7,000 to 7,100. And that's pretty much all I got for you today. That's going to do it for me. I'll be back here on Monday. Please like and share this video out there if you do enjoy this content. I want to thank Gokhstein, the Gokhstein News Network, and David Gokhstein for producing this show. And make sure you're following them and following the Gokhstein account as well as my own. So I will see you again on Monday. Have a wonderful weekend. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.